Let's begin with department accounts. Now, to start with, first of all, what is the reason to have department accounts? We need to understand. The reason behind having department accounts is when you have multiple departments in an entity, you need to check whether a department is contributing to the profit or not. Contribution to profit by a department is what we need to understand. Now, if I have to understand what is the contribution by a department to profit, I will have to assume within my company that every department is a separate unit or a separate line of business, in which case I would get to know clearly to what extent they are able to contribute to my business. Okay, with that context, this department accounts concept is formulated. Now, let's understand this with an example. Say there are 5 processes in an entity. There is process 1, all right. There is process 1, process 2, process 3, 4 and 5. Into these 5 processes, a particular material goes, because of which the final product generally comes. Now, raw material which goes into process 1, cost is 100 rupees, and they make additional inputs to it, say 20, okay, and then they make a margin. That means if I try to buy at this juncture from outside, I would have got it for 150. Okay, so sale price is 150. That means at this process level, with instead of raw material, if I buy something which is done to the next level, I can buy the same thing for 150. That means this process is actually making a 30 rupees of profit. Am I making sense or not? This 150 rupees is what goes to second unit, okay, second process, where he would take it for 150 and inputs, say another 30 rupees is the input, okay, and at this juncture, if I buy it outside, people sell it for 200 rupees. That means the markup what they are supposed to earn, they are supposed to be said to earn is 20. Again, this will go to third, okay, it is 200 here. Again, another 25 rupees is contribution from the third department, and it makes a margin of 25 and finally gives it out for 250. Again, this 250 goes to fourth unit, where it adds another 30 rupees of contribution, and 20 rupees is the markup. It comes for 300. So this 300 will go to fifth department. 300 rupees is what its cost is, and input is say 50 rupees. It makes another 50 rupees of contribution, 400 rupees, that is profit. Finally, for 400 rupees it goes out into the market. Okay, so if you ask somebody, they would tell that the cost what they incurred is 100 rupees and the price at which they sell is 400 rupees. Of course, there are some intermediary costs what they are incurring. Okay. Now, for somebody who does not know anything about the margins and all, what would he think? He would think that the margin is the complete margin what they've earned is 30 plus 20 plus 25 plus 20 plus 50. Okay. Company made that margin is what generally we feel. Okay. So what is the total margin here? 50, 100, 145 rupees. 145 rupees is the margin what the company made by initially giving an input of 100 rupees and additional contribution what they have done is 155 and added a markup of 145 to sell it for 400 rupees. Okay. If I don't give this breakup of margin, anybody would tell that 145 rupees is the profit which is made by the company. That's all. They will not tell how much profit is earned by which department. Yes or no? Hello?
Hello.
So for this purpose, you need to calculate department accounts. Okay. You need to prepare department accounts. Now, having said this, let's now get into what kind of departments exist and how we are supposed to account for each of them. That's the broad objective of the revision. Okay. Now, classification of departments broadly, you can classify departments into two. Okay. The first is where departments are not interdependent. Second is where departments are interdependent. Okay. Now, within this, if you see, not interdependent departments can be further classified into two. Okay. One is called as where the purchases are decentralized. Second, where purchases are centralized. Okay. Now, if this be the case, let's understand each of this independently and how accounting would be done inside this. With that, we are actually done. Okay. Now, first let's understand what is interdependent, which is basically where the departments happen to be in a process oriented industries. That means each department will become input for next department, like the example which I gave you now. Okay, in such case they are considered to be process oriented departments. Best example, you can take sugar manufacturing units or liquor manufacturing units, or you can consider cloth manufacturing units. Okay, predominantly almost every manufacturing unit will fall into this category only, because without a particular process to be done, you cannot move to the next process. That's why. Okay, so this is what we do in case it is a process oriented industry. Now, what does a purchases are decentralized mean? In case purchases are decentralized, it indicates that if purchases are decentralized, it indicates that, say for example, if you take cloth stores, or shopping malls. Okay, so in a big shopping mall, you will have multiple varieties of clothing available. What kind of clothing would be available? Number one, you would have men's formal wear, men's casual wear, women's, sarees would be different, or women's dresses would be different. Like that you will have multiple varieties. Number 5, kids would be different. Okay, like this you have multiple departments inside a shop. Okay, so in all of these cases, none of these departments will go together to purchase raw material or to purchase their required stock. Why? Because men's formal comes in cloths or comes in different place. Men's casuals, jeans and t-shirts is manufactured by some other factory. So these two guys can't go to a same place and buy whatever they want. In the similar fashion, women's sarees, it would be in different place. Pattu saree, if it is going to be in some other different place. They'll have to go to specific pattu manufacturers, and then only from them they'll have to buy. In such case, that is also different. And then dress materials, it could be different places, or kids section, completely it would be in different places where that gets sold. So like this, when you have different types of departments within a same store, they will not have centralized purchases. Each department will go and purchase separately only. That's why we are calling them as purchases are decentralized. Okay. The second category is where the purchases happen to be centralized. Okay, where you can consider, as I always say, you may consider example of Tata Chroma. Okay, where it has got varieties of brands and it has got varieties of divisions also. What kind of divisions do they have? They have kitchen appliances, or they have home appliances, home needs. They would have furniture or furniture usables. They have computers. They have mobile phones. Okay, like this they have a list of things which can be bought there. Now, when you see all of this, the question what comes is, how can someone purchase all of this in a single place is the question. Why it is possible is because, say for example, if Tata Chroma goes into LG factory manufacture kitchenware. LG factory has got home needs, that means TV, fridge or washing machine, everything is available with them. Furniture, few parts of small sets of furniture are available with them, or computers are available with them, mobile phones available with them. So like this, there are varieties of appliances which are available in the same brand. So what Tata can do is, they can send a list of all what they want for one particular branch with all of these details. Okay, in such case your job is reduced there. You are going to buy at a single place for all departments, then you are saving a lot of time and energy there. In such case you call them as centralized purchases. Okay, now how does accounting happen is what we need to look at. Okay, now when it comes to accounting, your method of accounting for purchases where they are decentralized is different, purchases where they are centralized is different, and purchase where it is a process oriented industry, it is different. Okay, now I will consider this as category A, this as category B, and this as category C, and let's do it. Now first let's understand about category A, that is where your purchases are decentralized. That means they are not interdependent, and have decentralized purchases. Okay, now in this case, think logically. Your accounts, what you are supposed to prepare is, you need to have a trading account, P&L account, and this profit will be given to company. That's the end objective. Now for a trading P&L account, what all do you need? Number one, you need to find out what is the opening stock. Number two, you need to know what is purchases incurred. Number three, you need to know what are the sales made by them. Okay, it could be debit sales, credit sales, or cash sales. Okay, then you would have various direct expenses. These have to be considered. Most important is other expenses which are incurred in common. Now what all expenses are incurred in common? Say for example, I have a rent to be paid. Rent will be based on the square feet which I use, or I have other expenses like salaries are paid to employees, and the same staff are working in two different departments, in which case maybe I'll have to come out with a ratio of 50-50. Okay, time based I'll have to bring, or I may have various other expenses, electricity. If I have a separate submeter, in which case I can go with the separate submeter itself, otherwise I will have to go with square feet because it's based on lights used. Okay, so like this you would have a different parameter for all of your expenses and record that into your place. Okay, so once this is done, you would arrive at a profit which will be transferred to the main company, and from there it would be preparing its own financial statements. Okay, so broadly this is what we do in case the departments are not interdependent and they have decentralized purchases. Now moving to the second category, where you have, I'll first finish off C. C is basically where they are interdependent. Okay, interdependent branches or departments. Okay, Now, when do you call something to be interdependent department? Where one department's output is basically an input for next department, then you call it as interdependent department. In this case, you would prepare trading P&L or your trading account. In fact, you would prepare your department account only. Okay, trading P&L account would be prepared for each department along with transfers. Okay, so those transfers are something what your important aspect is, because at times what happens is in these interdependent departments, there could be chances where the department will transfer to next unit, next department, and this department can also sell it to outsiders. If it produces an intermediary product which has an open market, I can also sell it outside, no? In which case you should be cautious about how much is being sold to outsiders and how much is being transferred to next department. Such clarity is supposed to be maintained. Okay, and once that departmental transfers are done, at the end of the period, you are supposed to see closing balance of material with each department received from previous department. Why do you need this? Because the previous department would have sent to me with a markup. If it does not add any markup, it's really good. But if it adds some markup, that is where I need to be really cautious about. Why? Because that markup, if it is to an outsider, it is fine. I am really making that profit. Otherwise, in the closing stock of my company, my closing stock is being shown at a market price which is not correct. Why? Because inventory requires, AS2 requires you to show your inventory at either cost or NRV, whichever is lower. Now here what are you doing? You are adding some markup to the cost which is against the standard. Hence, you need to find out how much is the amount of markup inside the stock which is transferred from the previous department to this department, and that amount of markup is supposed to be eliminated by creating something called as stock reserve. Okay, so this is what we are supposed to be really cautious about in case of interdependent departments. Is that clear? Can we go ahead, people?
Yes, sir.
Next. Now let's come to B, segment B, where they are not interdependent but have centralized purchases. Okay, this is very, very important. Why is this important? Because your accounting in this case is slightly tricky. When you have departments, there is a head office also. There is a head office and there are departments. Department A, B, C, D. Say for example, there are 4 departments. Okay. Now, head office will go and purchase whatever stock is required for each of these departments. And head office does never want to let those departments know at what rate they actually bought. Okay. Hence, when the goods come, the bill will go to head office, only goods will be delivered to each department. Okay. Invoice will be given to the head office or the central office, and each of these departments will receive the goods. They will never know at what rate the company has actually bought. Okay. Now, when this be the case, it would tell each department saying that say for example, department A is about home appliances. Okay, inside home appliances it tells that a refrigerator of X model is supposed to be sold for 20,000. You display whatever you want. You tell that it is 25,000 and then give 20,000. I don't bother. I'm not interested. But you should sell it for 20,000. In which case, this department will showcase multiple offers, try to convince the customer do something and get it sold for 20,000. Okay. So in this process, if this guy gets to know the rate at which the corporate office is buying this fridge, he might unnecessarily give discounts, or he might not obey to the company's decision to sell it for 20,000, or something else could happen. Okay. So to avoid all those conflicts, I don't want to convey what is the price at which I am buying. Okay. I would only tell my department saying that this is the price at which you should sell. Okay. So in this case, in this kind of accounting, we would use accounts like department stock account. Okay. Why is this used? To see and record what is the stock in each department and how much value do they hold. Okay. The second important, most important account what we maintain is department markup account. Okay. So why do we need these two accounts? Because to write various purchase and sales of stocks, I'll have to record using these two accounts only. Why? Because this markup account is going to be used by me for calculating profit earned from each department, whereas stock account is to record the movement in stock. That's all. Okay. So by using these two accounts, we are going to record all the transactions. Now say I have purchased on purchase of stock for a department. What would I write? I would write saying your department stock would be debited. Department stock account debit. 2. I have a vendor to whom I have to pay. Yes or no? Hello?
Yes, sir.
Okay. Or creditor. So generally, if I am sending goods at cost itself, you would mention cost only directly. But if you are selling at a markup, in such case, okay, same one at markup. In such case, I would write entry like this: department stock account debit, department markup account debit to creditor. Okay. So here stock would be how much? Oh, sorry. To department markup account, not debit. Okay. So department stock account would be at marked price. Okay. And in markup account, I will show only markup. And the net amount will be what I am supposed to pay to my vendor. Am I making sense?
Yes, sir.
Okay. Now, once this is done, say let's take it as an example. I have purchased an item for 100 rupees and sent it to my department stock for 150, and 50 is my markup. So what will the department do? department knows that he has to sell it only for 150. He does not know anything else. Okay. Next, number 2, on sale. On sale, the first possibility is sell at marked price. Okay, if you are selling at marked price, that means department is selling at exactly the same price which you sent them, in which case entry would be what? You would receive cash and give it off the goods. Okay, so in such case, bank account debit to department stock account, it's going to be 150 and 150. Second possibility is I would sell at times above market price. Okay, in such case I am going to receive more than 150, say at 160. Okay, in such case bank account debit 160 is what I am receiving from the customer, to department stock account 150, to department markup account the remaining 10 rupees, extra 10 rupees which I have earned now. This is the markup. Same way, you may also sell at times below marked price, say 140, in which case you will collect from customer bank account debit 140, department markup account debit 10 rupees, to department stock account, earlier you kept it for 150, now the same 150. Okay, so by doing this, your stock and also markup are being taken care respectively. Now the next question comes, sir, every time we send goods to department, it will not get only sold, sir, sometimes it gets damaged, sir, in which case, so this is entry number 3. If stock is damaged, okay, in such case, whatever stock is damaged is supposed to be charged to P&L to the extent of cost, and markup will be reversed. Okay, so say 1 unit is damaged, in which case your entry would be P&L account debit, department markup account debit to department stock. Your department stock is 150, out of this profit is 50, your original cost 100 rupees is what you are going to charge off to P&L. Am I making sense?
Yes, sir.
All right. Next. Now, once your all transactions for a period are over, okay, you will transfer profit in department markup account to, where will you transfer? Hello?
Consolidated.
That's all. Yeah. So you will send it across to department P&L account, where you will consider all other expenses what are incurred for the department, and that will be transferred to the company's P&L account. Okay, so entry for this would be from your department markup account you are transferring to department P&L. So it would be department markup account debit to department P&L account. Okay. Now apart from this, there are few special transactions also which can happen during a year. What kind of special transactions can happen? Number 5. At times, the price which I have told my department to sell could be wrong, because you need to compare with the market. Say for example, the same refrigerator, if Tata is selling for 20,000 and Reliance is selling for 18,500, you should also match that price. Okay, in which case what you would do is, number 5, you will mark down, okay, the price. So if I have to mark down the price, what would be the entry I pass? For marking down, already you have recognized from at 150, out of that 150, 50 rupees is profit. Say for example, now it is worth only 135, you should reduce 15 rupees. What will you do? You will have to reduce the stock also to 135, and the difference of 15 rupees is supposed to be charged to markup account. Okay, so what you would do is, department markup account debit $15 to department stock account 15. Okay, same way, at times you may have to mark it upwards. The price. That means you know you are selling for 150, but competitors are selling for 170. Why should you sell for 150? You can also make more money, no? In which case you will add that profit more to the markup account. Okay, so how do you do that? Department stock account debit to department markup account 2020. By doing this, what happened? Your price will become 170 from 150. Okay, so this is how various activities you do in your department accounts and prepare your financial statements for the company as a whole. I hope this clarity is sufficient for you to do problems. Okay.